What is up, everybody? This is Books of the Stock Market. I hope everyone is doing well. This is the Sunday report where I cover the top articles from Monday through Friday. At the end of each article, I'll be giving my thoughts on how the article could impact or has impacted the financial markets. Without further ado, let's get into this week's Sunday report. On Monday, we saw the ship that was blocking the Suez Canal become free. There's not much to say about this issue other than that we probably do not need to worry about supply chain issues. There were already supply chain issues due to Corona, and this would have been a big problem. However, since the ship was dislodged, around 43 ships are able to continue their travel. On Monday, Bill Ackman said that he does not have any companies in his mind that are potential acquisition targets for PSTH. As we saw in the last video, PSTH is worth around $5 to $7 billion after IPOing for only $4 billion. PSTH has fallen as much as 30% since its high. It is currently trading at a $20 range, so it is still up from its IPO price. Bill Ackman also announced that he is trying to start another SPAC. However, he did say he's only willing to release the second SPAC after PSTH acquires the company. Surprisingly, if we stitched his talk all together, there were some contradicting instances. He did say during the call his second SPAC was not far off, so if we put that two together, maybe he's hinting at an acquisition in the near future? He then went on to give the usual PR talk where he's looking for companies that have good environmental, social, and governance values. Therefore, the question is whether to get into PSTH after being brought down around 30% from its recent high. Rest of Monday was pretty slow, and we got the same dialogue from the Fed. Fed Governor Christopher Waller said rates are not low to help the national debt. With national debt skyrocketing the past year due to COVID, it's obviously in the Fed's best interest to lower rates. Christopher Waller said the Fed was not keeping rates low due to the debt problem and further emphasized monetary policy would not be used in that way. The national debt is at $4.5 trillion, which is a 20% increase. This type of increase has never been seen before. The deficit for the fiscal year of 2020 was at least $3.1 trillion. Major costs of this deficit included buying at least $80 billion in treasuries each month and around $40 billion of mortgage-backed securities. He also reiterated two common stances of the Fed. First, he said the Fed knows that lowering rates do have negative consequences. Second, he also said the Federal Reserve is independent of the central bank and is not following different countries' monetary systems. Starting on Tuesday, we saw the New York Federal Reserve Bank President John Williams come and say that he's bullish on the economy. He mainly attributes this bullishness to vaccinations and the government helping businesses. He said that the Fed's rate cuts helped businesses survive during the pandemic as borrowing money became much cheaper. Despite his remarks, we saw the S&P 500 trade relatively flat for the day. The S&P 500 was down 0.32%. The Nasdaq was also relatively flat for the day as it was down 0.11% for the day. The positive news continues on Sunday as we saw oil fall ever since the Suez Canal was unplugged. While the Suez Canal was blocked, we saw oil rise a lot. However, after yesterday's news, we saw oil fall. In terms of oil, OPEC Plus will be having a meeting on Thursday. In Thursday's meeting, people are expecting to hear talks about cutting oil output as demand is still low during the pandemic. With vaccine having problems and several countries entering lockdown, the pandemic has greatly decreased the demand in oil. Many believe Saudi Arabia will be accepting a proposal to extend oil production cuts until June. This is pretty bullish news as cheaper oil is always good for the stock market. The best news of the day for me is all the crypto news. We saw cryptocurrencies rise after PayPal will allow their customers to pay with crypto at 20 million merchants. Cryptocurrencies that are affected by this are Bitcoin, Ether, Bitcoin Cash, and Litecoin. Bitcoin is currently trading at the $58,000 range. On the other hand, we saw Ethereum trading at the $1,800 range. We also saw Visa enter the crypto space. Visa said its network will use blockchain technology to help with the transactions. We all knew blockchain was a superior way of conducting transactions, and it looks like it is finally going to be used. This is extremely bullish for cryptocurrencies as the backbone of crypto is being implemented in one of the biggest financial companies in the world. The biggest news on Wednesday was Biden's $2 trillion infrastructure plan. Biden said he's going to fix 20,000 miles of roads and fix the 10 most economically important bridges. He also said he's going to get rid of lead pipes and other environmentally damaging materials. This plan is expected to last over 8 years. The length of the project tells Biden is planning to run for re-election and how dedicated he is to stimulating the economy. However, even more money is expected to be spent. This proposal is the first half of a two-step release. The Biden administration is expected to spend at least $4 trillion in doing major overhauls that will promote economic and racial equality. Obviously, the Republicans did not like hearing this number. Republicans are worried that the Democrats will push this through Congress as they hold a majority and will break the tie in the Senate. Now, let's go over some specifics. A total of $180 billion will be used for research and development, $115 will be used for roads and bridges, while $85 billion will be spent on public transportation. Off this news, we saw the S&P 500 SPAC midday but closed relatively flat. The S&P 500 is only up 0.36% for the day. On the other hand, the Nasdaq 100 was up 1.51% for the day. As we all know, the stock market went up as this basically confirms inflation, as spending is going to be off the charts. So if you have a large cash position in your investment portfolio, maybe you should think otherwise. On Wednesday evening, we heard from South Korea that their exports rose 16.6% in March. South Korean exports are on a 5-month winning streak. Expectations were already high at 16.2%, but South Korea beat those expectations. Imports, on the other hand, gained 18.8%, which also beats forecasts of 17.5%. Many attribute export rising due to computer chip demand being ever so high. The data show that exports of chips expanded for a 9th month in a row. The Kospi opened green and is up 0.6% at the time of recording. On Thursday, we saw more Americans file for unemployment benefits. Analysts attribute this to factory workers being laid off at the highest rate since February 2018. However, the manufacturing sector is really booming right now. The Institute for Supply Management just recorded a 64.7 from a 60.8. To put this into perspective, any number above 50 indicates the sector is expanding. Many analysts believe that jobless claims will continue to go up during the expansion. The initial jobless claim for state unemployment benefits jumped 61,000 when compared to the previous month. Currently, we see 719,000 jobless claims for the week. However, we saw the S&P 500 brush the numbers to the side and close the day up 1.18%. It looks like the markets are ignoring the hard numbers due to the huge infrastructure plan that was announced on Wednesday. OPEC Plus met on Thursday and they decided to slowly increase their output over the next 3 months. This will be continuing until June, but in July they will be increasing it even more. These increases are expected to last to June. However, in July they will even output more barrels. Around 440,000 barrels per month will be outputted in July. They are betting on the vaccines really accelerating the return to normalcy. Furthermore, the months they are increasing oil production for is during the summer, which is when we usually see the demand of oil go up. It was reported that the US had a say in convincing the Saudi energy minister for some cooperation. The reduction in oil prices will further help the economy as the cost in the supply chain will lessen. Prices are already up due to inflation, so a decrease in oil prices will be pretty helpful. However, the WTI ended up 3.52% for the day. I think this is due to the immense amount of stimulus Biden announced yesterday, causing all commodities, stocks, and other financial markets to rise. On Friday, we saw the job report go pretty well. In March, the US added 916,000 jobs, which is twice as much than February and the most since August. The unemployment rate, on the other hand, fell to 6%, which is the lowest since the pandemic. The data was mostly from before many people were getting their $1,400 stimulus checks. As you can see, there are job gains in all aspects of the US economy, from construction all the way to state and local governments. We saw the highest recovery in leisure and hospitality jobs as states start to reopen and people start to get out more. So far, the economy looks like it is recovering and we're not really seeing any pushback in the progress to normalcy. So what are my thoughts on this week? Stocks are up while oil prices are down. Stocks are up due to Biden's $4 trillion stimulus plan, while oil is down due to some negotiations between OPEC Plus and the US. Everything sounds pretty bullish to me, and I'm eager to see how the stock market plays out. Well, that's it for me. If you like this video, press the like button. If you have any questions, leave a comment below. If you don't want to miss out on any future content, press the subscribe button. Thanks for tuning in, and I'll see everyone next week.